Hello everyone, this is Gaia with you. Today we're going to talk about the current situation in the Bitcoin market, which looks extremely interesting right now and may be signaling some major changes ahead. Why is this an ending diagonal or a rising wedge? There are several reasons why this pattern is considered a bearish reversal. Wave structure. Unlike the leading diagonal where the waves are impulsive, here we see that the internal price movements within the wedge look more like corrective zigzags. Location. Such formations usually appear at the end of a trend, signaling its exhaustion. Our current context is the completion of a strong upward move. Narrowing. The price is clearly trapped between converging trend lines, which is a classic sign of a wedge. And here is the most important thing to pay attention to: trading volume. As price crept up within this wedge, volume consistently declined. What does it mean? This is classic buyer exhaustion. The price is rising, but enthusiasm is fading and major players are not supporting this growth. This is a clear sign of bearish divergence. The price is making new highs, but the strength of the trend is declining. On the chart, we see not just the formation, but a clear breakout below the lower boundary of the rising wedge. The last red candle closed with its body below the support line, and this breakout is accompanied by an increase in volume, which adds weight to the signal. Moreover, the appearance of this strong red candle, whose body completely engulfed the previous green one, has formed a candlestick pattern known as a bearish engulfing. This in itself is a very strong reversal signal, indicating the beginning of a downward movement. What should we expect next? The bearish scenario. All these factors add up to an unequivocally bearish picture. So what does this mean for Bitcoin? The most likely scenario is a further decline in price. If we stretch the Fibonacci retracement over the entire growth cycle, the potential correction targets could be as follows. The first target is the green line on the chart. The second target is the yellow line on the chart. The third target is the red line on the chart. The base of the wedge, which often serves as the first target for a decline, is at around $70,000. This level is approximately between the first and second Fibonacci targets. A small upward pullback is possible to retest the broken support line, which will now act as resistance before the price continues to move down. Final verdict and conclusion. Thus, the situation in the Bitcoin market looks extremely serious. We have a completed reversal pattern, confirmation of trend weakness, a clear signal to act in the form of a breakout, and additional confirmation of the reversal with a candlestick pattern. This is not the initial phase of a new trend, but rather the final stage of the current upward impulse. Be attentive and cautious. That's all from me. Don't forget to like, subscribe to the channel, and share your thoughts in the comments. See you next time.